Hello, good day, and welcome back to Miraculous Accounting Tutorials. Today we'll be looking at the summary of the equation and also summary of effect of transaction on the balance sheet. All these are still under the accounting equation we've looked at previously. So if you are joining us for the first time, or if you're watching my video for the first time, please do want to go back to the previous videos in order for you not to get lost or confused in whatever thing we'll be doing today. Now, starting with summary of the equation, you recall very well that we say that assets is equals to capital plus liabilities. Okay, from the question we solved so far, you be very well to know that capital is equals to assets minus liabilities. Remember, when the plus sign crosses an equal sign, it changes also the minus sign. So we've gotten an equation for capital. Now, if you're asked to find liabilities, so we will say that assets, liabilities is equal to what? Assets minus capital. The same thing I've just discussed here. Assets minus capital. Okay, now some students were still asking me, sir, can you classify these assets? Very good. Now recall very well that I mentioned that assets can be defined as what? Properties or resources of what? A business organization. They are properties or resources of what? A business organization. Assets. They are properties or resources of a business world organization. Okay, example of this asset are what? Land and building. Okay, land and building. We have also motor van. We have plant and machinery. I'll just use the acronyms. Plant and machinery. We also have equipment. Okay. Now, all these ones that I have mentioned here, they are all known as fixed assets. They are known as fixed assets or non-current assets. Fixed assets or non-current assets. Okay, let me just do something here. So we have fixed assets here, and okay, this is fixed assets, so that you can always recall at any time. Right? Fixed assets. Or you can call them what? Non-current assets. Land and building, motor van, equipment. We have premises. We have furnitures and fittings. We have premises. Okay. We have furnitures and fittings. So all these are under what? Fixed assets. Now, we also have current assets. Basically, assets are divided into two. In the first class we looked at under accounting equation, I mentioned that assets divided basically into two categories. That's the fixed assets, or you can call it non-current assets, and also the current assets. The current assets. Now, examples of these current assets include, we have cash in hand. We also have cash at bank. Okay, we have stock. We have stock, that's stock of goods. We also have bills receivable, bills receivable. We also have hmm, prepayment, prepayment. Okay, and debtors. Okay, these are some few examples of what current what assets: cash in hand, cash at bank, stock, bills receivable, prepayment, debtors, and so on and so forth. All right. Now, liabilities. Liabilities. What are liabilities? Now, liabilities are simply what obligations to pay out money at some time in the future. They're simply what obligations to pay out money at some time in the future. Liabilities. They are simply what obligations to pay out money at some time in the future. So we'll be looking at some examples of liability so that we can classify them anytime we come across them in a question. Now, it is simply what the indebtedness of the firm to outsiders. Simply what the indebtedness of the firm to outsiders. Recall I first say that liabilities are obligations to pay out money at some time in the future. Okay? Now it is also what the indebtedness of the firm to outsiders. It's simply the amount of money a company or a firm owe towards outsiders. So example of these liabilities include loan, overdraft, overdraft. We also have creditors. We also have accruals, and so on and so forth. Okay, but for so you know, though we'll be looking at that when we'll be treating balance sheets. Liabilities here is divided basically into two categories, which is what the non-current liability, or we call it long-term liabilities, and also the current what liabilities. Okay, so remember I mentioned earlier today that we'll be looking at summary of